Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 20th of January, actually 21st. I said that wrong. 21st of January, 2020. That's where my brain was. Now, we're at 535, which means everything behind me, with the exception of the dollar index, most of these markets are open. They open at 5 p.m. Central Time. I'm late. Normally I try to get these out before then, but the world's not perfect. You can see you got a settlement on the soft markets, but the bonds and notes down a little bit. But boy, what a rally they had today, and they're in some resistance. We'll take a look at that in a minute. And you can see mixed energies. Now, the news of the day, of course, is the impeachment trial. It's the marathon going on right now. Began at 1 o'clock. Probably won't end until tonight, about 8 or 9. Originally, they were going to go 12-hour days. They're not. These are not young people. I don't think they can do that. So look for this to spread out a bit longer. Okay. It will impact certain votes, obviously, in Iowa. Could be other areas, but we have to wait and see what that's going to be. The other news of the day, and the scary news, was, of course, the spread of this Chinese virus. And you got to go back, and I recommend you do it. Google SARS 2002. See what the financial markets did under that when it came out. Similar reaction seems to be going on, and that's because people are petrified. There's no cure at this point. People are dying, not a lot yet, but 800 died in 2002's outbreak. This is a different disease, and as I said, they don't have a cure, and it's spreading. Originally, it was animals to just people. They thought they weren't right. It can go person to person. The first case in the U.S. was discovered today in Seattle, Washington. We've got Japan, Australia, South Korea, obviously China. I'm hearing that it could be Thailand, maybe Philippines. We'll find more countries, and the reason is China's so big, the people are on the move. It's the lunar holiday. They're traveling, and it's hard to tell from what I'm reading the initial difference between a cold and whether you have this virus. Wow. In any case, the S&P, down from its peak 5 points. Whoop-de-doo. Nothing's really changed. When you take a look at the action, yeah, we had today, if we come to it, yesterday's high was 33.30.25. Today you didn't get there, you broke down instead, and tonight you're still down. So where's the swing line? Well, you have the pattern right here of a low. I don't know if this is going to be the other low, friends. This is an inside day so far. You can't judge it. If I take that off, you've got a high that's a higher high than that and a low that's a lower low than that. It's not trending at this point. I'm not blind. I see the thrust to the upside, and so do you. So we know the momentum's been up, and we know that because the market has stayed, and I pointed out to you, each time it's hit this 18-day average recently, that's the bargain basement price that so far has been on traders, apparently, on their radar scopes, and it seems to be there. So 3270, that's where that number is right now. The resistance is the upper Bollinger Band. You can run against it, but staying over it, just keep saying, 5% of the time. That's how the algorithm works. And the algorithm adjusts to price. And then price, the traders that understand it, they adjust their mentality. Even the algos will adjust to where that band is. So you always pay attention to those bands. In terms of the slow stochastics, well, you can see where the market's at. It's embedded. Embedded means it's locked in. So I'm viewing this pullback as just that. It's a pullback, not a trend change. Get the red line under 80, I go back to the drawing board. Are you coming down to this number or some other number at that point? In the NASDAQ and the QQQ, which I cover in my SPDR and ETF video, you can see you've got a low here and then higher lows. You hit the upper Bollinger Band, you back off a little from it. And backing off doesn't mean you have to go down. It could be a higher price, but getting back under the band and drifting, and you keep attracting buyers until that red line there is going to close over 80. That's my theory. Does it always work? Nothing always works. Understand that. If it always worked, I'd be the richest guy in the world. Maybe Ken Griffin or somebody like that, who I think's unbelievable. But you got higher lows, higher highs. You're sitting here with the upper Bollinger Band, resistance there, drifting back down. I'm still thinking Traders are buying these breaks. I have not seen a break in the trend. In the Russell, it's been overbought. This is the market that refuses to embed with the others. You can see it just gets to an overbought area, starts drifting. I wouldn't be surprised if support's 1675 or so. You'd have to come all the way under this low in the 1649 area to break the upward pattern. So I'm looking for the pros if you can get away from this overbought area. How do you get away from it? Both numbers have to get under 70 or go over 80 and stay there for several days. It's easier to get under the 70, so we'll see if it can do that tonight. I was disappointed in the VIX because I kept telling my traders, I think that if you get down to that Bollinger Band, you're going to get short put writers looking for the 18-day average. Didn't want to get there. That's a big number, 11, to get to. It's very hard. So now what do you do with this momentum? Well, all the market did is it's neutral. It's stuck at the 18-day average of closes. If you can't see that, I can't help you. You're caught in a sideways action of the Bollinger Bands. You're in an oversold area. In the T-bond market, I'm noticing a pattern of higher lows, higher highs. If you look at TLT, it got into, and I'm talking that is the ETF for these markets, it got into the resistance area. Remember, if you haven't seen my Spider ETF video, there's one that's here on YouTube if you watch there, but on our website is the one where I say buy here, sell there. I want you to do this. There's more studies in it. If you haven't seen it, go to our website, sign up under free trials. It's got it listed. We'll make sure you get access to it. Higher lows, higher highs, loads of resistance, 159, 230 seconds to 159 even. I think the market's going to have problems there as it's already in overbought territory. 10-year notes, same as the bond, except not overbought. It's got the higher lows, higher highs, but I see a lot of resistance between the upper Bollinger Band and 129.20. This was a safe haven buy today as traders got scared of two elements. The impeachment trial, certainly, but I don't know. We've known it was coming. I think it's this virus out of China, the speed that it's traveling across the planet, and now they're finding more people infected and there's no cure. I think that is the fear, and that's put this market, I think, to the upside. Dollar index, if you don't see that the 100-day average is acting as something of a barometer of the line where the market's either, if it's under it, finding resistance. If it falls to it, it's fighting a battle to see is going to get back over it or stay under it. I don't know how to help you, but this market's got a lower low, higher high, overbought condition at a resistance point. No, it's not thrown out sell signals. It's also not thrown out buy signals yet. Eurocurrency. I would think the euro got weak today off the fear that if the Chinese economy weakens because of this virus, they're directly impacted since they trade so big with them. Higher high and lower low. There was actually good news in the euro currency area as President Trump and President Macron agreed to postpone the U.S. tariffs on luxury goods there and the digital tax that would go on our big companies. That was a big event. It's getting no applause. Everything else overshadowed it today. Did you watch Davos? I did. I've been up since that came on this morning. In the British pound, we're running into resistance at this 18-day average of closes. Are we trending? Not really. You got a lower low. You can see that here, actually, and a higher high. Oversold market, just sort of stuck, not going anywhere. In the Japanese yen, as long as you keep this embedded reading, see this rally today? I wouldn't be surprised if the market fails on it and makes another move to the downside. This rules the day, not emotion, not other parts. Lose that, and then I think the shorts come out, and I think you'll be at the 18-day average. So which one of these you want to bet on? As long as the embedded reading's in place, I'm betting on the downside. In Bitcoin, you have a lower low, higher high pattern with an embedded reading. Still bullish. This, not this pattern, rules the day. And until it's over, in plain English, it ain't over. It's still friendly. In the Brent versus WTI, well, you can see the premium at 624 hasn't gone away. I read today the EIA report on energy, that's our government, and they still think this premium is going to stay similar to the $5, $6 area where it's at. And they talk about, obviously, the geopolitical risk to the Brent oil. When you look at where the market's at, you're out of a trend. You're not in a downtrend or an uptrend on the chart. This rules the day. You have an embedded reading. I think the pros are selling this rally still, looking for more of a decline until you lose that reading. In the WTI, you have an embedded reading. This rally to me is contra trend. I think the pros are sellers until that's lost. They're looking, maybe you can get back into that 57 range. Lose these embedded readings and I'll have a different point of view. Gasoline, this is the kind of action I've been wanting to see. For those of you that saw my energy report, this all fits right in with it. I've been looking for a decline, for the market to then churn, and we'll see if the market can get into that seasonal spin to the upside. Hasn't done it yet. I would use a warning sign. Take out today's high. That would be a warning that maybe the seasonals are ready to kick in. That is not a bull sign because you're still under the 18-day average. And frankly, on this chart, you can't get a bullish signal just yet. Natural gas. Been talking to you. I thought we were going under 2 for a long time. Ira, let's have it. I have been consistently telling you there's just too much of this around, and there's too much of it around. This is the heart of winter. We are in freezing temperatures in much of the Midwest, and you can't get a rally. When are you going to get a rally? In the spring? I don't think so. So we'll see what price can do to it. Price is the way that you solve a lot of this. Stop production. That's going to be the key. You keep producing it. The market's telling you where you're at. Is China taking it yet? I don't know any of that. I haven't seen anything about China taking our natural gas. It is a product they should take, but we'll see if they can take it. Remember, our guide to technical indicators teaches you everything that I'm doing here in terms of an overview. It's not going to teach you how to work with moving averages the way that I do it. That's in my charting course. That's in my morning subscriber video. That's in my afternoon spider ETF video. But this is a great primer, so at least you understand what we're talking about and what other traders are talking about. It can be moving averages, oscillators, the Arun indicator, price-time relationships, finding out if the market's staying in a trend. How do you get it? It's free. We've made it into 2 PDFs. You can print them out or read them on your screen. Go to our website on the far right bottom. You'll see our free offers. Take that. And if you'd like to see that Spider ETF afternoon, I define afternoon. I typically publish that between 3 and 4. It's different than the one on YouTube. This is what my subscribers will pay me for because I'm saying buy, do this, here's your stop, this is what I want you to do. Very tied together for you that watch stock markets and the ETFs and spiders. You can also click here, it'll take you right to that page. I'm Ira Epstein. You have a great day. I'll talk to you all tomorrow.